Good morning. How are we all doing? I like that, Pat, when you remember to say hi to the greenies. You always say hi, but Pat coined the name greenies. Good morning. Oh, boy, here we go with this thing. All right. So yesterday, market rips higher on comments about interest rates. That I was just reading. Where was I reading that? Market went up, and the idea of lower or Fed not raising interest rates based on comments, yet the data, December, whatever, futures, say it's coming. So is this some kind of fake out rally here? A trap for bulls? Who knows? We always, you look at news or you hear news things and read this kind of stuff, and it tends to play what you're thinking. And I'm not saying that none of that information is useful, but primarily over the years, my lesson has been to just go with what the charts say, and kind of just ignore it as much as you can. So objectively, where are we at? And so looking at the Dow futures here, we've got this big move up. We've got a wide range bar right up into resistance. Yesterday we talked about the price void. I mentioned the fact that this bottoming price action here, this whippy stuff that was going on. And I said that based on this larger bottoming process versus this smaller area of resistance, prices should be able to get through that and potentially enter the void and move higher. Okay. Well, it did exactly as planned, and Greg came away from that empty-handed, which sucks because Dan and I were doing MT Live when that news came out and things exploded, and it is what it is. So now, personally, I'm faced with, how to get in this. Well, I think that we just continue our factory work. Prices are at resistance, and we have to wait for some consolidation. And typically, the consolidation days do come after wide range days, especially into resistance like this, which would suggest today would be a narrow range day, a consolidation day of the prior day's gains. Now, anytime you get a wide range bar, you know that there's going to be a momentum move. And there's no doubt it's right there. And the most bullish thing that this can now do is create resistance and not pull back here. And so let's just throw that up there. I know exactly what's to the left.
You mean create support?
Yeah, create support. That's what I said. And so now, as this goes sideways, we want to see it stay in the upper half of this wide range bar, and ideally in the upper third. Right? So you hear me say this explanation as to wide range bars and how to interpret them every time. And I'm saying that to reinforce the fact that what we do when we have a method, that it's factory work as to how our interpretation is, and then our other concepts come into play as things play out according to plan or not. So we'll see. As we get a swing low, typically that gets retested, maybe a little push below it, and that provides us a new support level to trade against and put on trades. Now, the problem here is, where do I put a stop? Because I have to take into consideration a disaster, meaning something happens and the markets do some crazy thing and fall all the way back down. Well, I've given this some thought as to that, of course. And what is the probability of the markets doing some crazy thing here? Over here, I would say it was relatively high for it to do some crazy thing. So when this came down as it did and started from the top, we didn't know it was a top at the time, but we did have a wide range bar down, very powerful bar. So the probability of doing, let's just say, a crazy thing, of breaking through this low and going lower wasn't out of the realm of possibilities, especially since we had the main low here. It stopped at this one, and then was possibly could it create a W bottom and go up? That was a thought at the time. Didn't happen. When it formed the green bar, it failed and became a topping tail bar. That's why you wait till the end of the time period or very close to it before viewing that bar as being a signal. And so topping tail went back down to the next reference point. Now, big rally up, collapse all the way back down. So the odds of this turn right here, what was wrong with this at the time? Well, I said the angle of retracement wasn't bullish and it was more bearish. But we could possibly, with a little back and filling here, build something up to possibly go higher. No, it turned into a measured move down. And this is where the buyer stepped up again. So now, what is the probability of this falling apart and going back down under this low? And I'm not looking for an exact number, but do you think it's a good probability or an unlikely probability? All right, Alex says 0. I like that confidence. That's 17.5. Okay. You sure they want to make that 17.5 too? Right. So there could be some possibility, but with a move like this, in what time? Now you're throwing a curveball into my pre-market stuff here, Alex. You throw me off the track here. Within the next 2 weeks to the end of the year, going below that low. 0. Okay. I would tend to agree with that. Within the next 10 years, probably pretty high. Now, we got to say, well, why should we believe such a thing? That it's near 0 or 0. That's a pretty powerful move up, and there was pretty broad participation in a lot of stocks. But the next step in the factory work is, let's look at the weekly chart. We know that the size of that move must be pretty bullish. And so as we look at this chart, we see the breakout failure and the topping tail and the move down to support where it should be. And part of our conversations was, could it come down here? Which it could have. But now we've got a reversal bar that's retesting a bottoming tail bar that rallied all the way back up to the prior week's high. Now, this bar isn't done. We've got today and tomorrow to deal with. But assuming that it looks anything like it does here, I also think that the probability of breaking down under this low is extremely, extremely low. So what do? Well, now we go back to our daily chart with our bias, and we say, let's buy this on any pullbacks into here. Will it hold the 50% level? I don't know. It should if it's that bullish. But if we buy there, we start putting on partial positions, and even at the 200, and we share size it for whatever our dollar stop is going to be, right? Our assumption is it's not going down here, so we will find a stop that is above this level, okay? This would probably be the most safe level, but it's pretty far away. So our job now is to find something inside of here for entry points, and we apply the same thing to individual stocks. Now, as we go through individual stocks, things like Apple, which is more of a climactic kind of buy, you don't have a retest, but maybe could go up to here. So you start picking things that you believe should be able to participate with the market rally here. And even though this has been clobbered, a lot of stuff has, I think it's going to participate in some way going higher. As we scan through our charts, we will find other stocks that look better than Apple. And that's what our job is, to do that. NASDAQ, big move up as well, wide range bar. Let's look at the weekly chart. And this certainly looked like it was going lower down to here. And we even talked about the possibility of a measured move. But I said, you know what, while this chart suggests that, the Dow and the S&P and the Russell and all that really didn't support a kind of a measured move here, because if this was making a measured move, all of those patterns that were suggesting the probability of a W type of bottom just would not have happened. So we had a lot more evidence in those other markets to say, you know, the probability of the NASDAQ going down here was lower. It didn't suggest that it was going to have this kind of a day, but those other markets went up. You know, everything based on news related to, let's say, the United States, maybe even the world. I don't know. I haven't looked at markets around the world to see how they reacted, but if they reacted in unison with our market, it went up. I think that adds to the confidence that this is going to hold. All right. Exactly right. You had a retest, increases confidence, and a 180 reversal, all good. Europe's bad. So Europe's been bad all along. U.S. market's done relatively exceptionally well compared to Europe, but maybe they'll bring up the rear. You know, this is our primary focus here as to these markets doing better. And China's doing good. Okay. But we've got this big reversal bar here on the weekly chart, and we should see buyers on pullbacks, because after a big turn like that, the bias for many are going to be that you're going to have buyers looking to buy on the pullback. S&P, same story. No need to repeat. It's there. Bonds, kind of going up here in the middle of nothing. Better things to trade than that. Oil stabilizing, obviously been crushed. It's at a whole number here, trying to hold. And I like, on a short-term basis, the fact that it dipped down and it popped back up again. Gold, nothing to do there. And the last thing to take a look at is our internals. So when we think about probabilities, we say, well, do our internals tell us that it's foolish to think that these patterns are going to hold? Right? Because sometimes the internals say that pattern's not going to work. I know you guys are pattern traders, but aren't the internals say, no, it's not going to work. And the majority of times it doesn't work. So we'll take a look. Yeah, thanks, Alex. I'll take a look at the transports. So our sentiment here, right, where we fondly call the option traders that jump in at the worst possible time the idiots, right? They're not all idiots, because we trade options and we're certainly not idiots, right? But sometimes the idiots, they load up at the worst possible time. So we track them intraday to see when they start buying an excessive amount of calls or puts. And you've seen how accurate that is, almost to the minute sometimes, where these guys reach an extreme and the market turns. But some of the time what we do is say, you know what? The idiots are betting against this market going up. And that's great when we see that. And that supports it continuing to go higher. And that works great. So we keep an eye on that. So as far as our swing view or end of year rally view, we've got gas in the tank here, because this moving average around these bands that adjust for the market environment is neutral. So while it closed somewhat high, not all the way above 0.8, even if it does get a close above 0.8, what that would suggest to us is that we're going to get a stall in this move up. Our intermediate term moving average says the tank is half full. And when the tank was full, right, extremely bearish, this is where we got the rally and the retest, and we still got gas in the tank to drive this market higher. Now, we see those moving averages up there. They should be like running into a paper wall, let's say. While they're widely followed by institutions, the 50 and the 200, the seasonality, the pattern, the internals say that's going to be a stall point right there. And just like we looked at yesterday, the intraday pattern, and we reviewed that should be a stall point. Those moving averages should act in the same way. We can't ignore them because they're so widely followed, but they should be a stall point within this market's ability to push higher based on what we've just reviewed. Whether it can make new all-time highs, I don't know. We're going to assess that information as this thing progresses. Right now, we're looking for some type of corrective action, slightly down to sideways, with an expectation that prices can move up. The transports showed relative strength last week. And I'm going to remind everybody what I wrote in Monday's letter, because the transports were the only thing that showed some strength. Good morning, Phil. That showed some strength, and I pointed that out. But I said there's little to nothing positive that I can say about this market. And that in itself may be the sign of a bottom. And it turned out to be. So even while my factory work at times leads me to say, there's nothing good here, having monitored what I had previously forced me to view my thinking at that moment as a contrarian indicator. And that is the ultimate, let's say, ability to just view one's self objectively and in their analysis to say, right now, you might be the contrarian indicator. So be aware of it and see if things change from what you're looking at in this moment in time. So transports look great. They got through the moving averages, even though that they are a death cross. And that just shows the subjectivity of such foolishness that's talked about in the media with moving average crossovers and such being a death cross. It's so ominous. Yet there's a wide range bar blasting through. And now eventually, if this continues up, the 50 will give I don't know what you call that. And the 50 goes above the 200, a life cross, whatever. Anyway, moving average crossovers are subjective. And golden cross, thank you guys. I forget this stuff. Anyway, Dan, it's all yours.
Hey, good morning. That's a good little story about your contrarian being your own contrarian.
Glad you enjoyed it.
But so that's a good little lesson you could do for folks, and then also the lesson right there on the death cross. Those were two good little lessons right there.
Okay. I just did it.
Yeah. So right, but you're right. So yeah, we're gonna be looking for IYT for a put spread today. They, unfortunately don't have weeklies, but I like the pattern enough that we're gonna do it out of the money here, 184s. And in terms of, I know what you said, yes, this looks like a great bottom, negated this ugly close right here, and this was the weekend. So this is what we were looking at. And it just looked like it was a screaming short Monday under Friday's low. And gap up, gap down, negated, and then, the rest of the story. And yeah, not only did I miss because of the MT live. I was trading though when Greg was doing the introduction yesterday. I saw that. I'm like, wow. And then unfortunately I had a meeting outside the office, and you know how that happens. But we'll be looking for put spreads, as we said. And so the only just thing I'd like to add to the confidence of this, and I like what Greg said also, that's another lesson, is just read what's real in front of you, even though we know things are coming down the pike. But with the G20 this weekend, you know, everybody's going to be looking at what's going on with China. And that is a significant event if, you know, depending on how they resolve that. And for the market going up or down. So the question is, do we want to take a lot of weekend risk, assuming we have bullish patterns, or take it a little lighter? You know, it's just something you have to highlight. That's all. If they come, you know, Trump's a poker player, likes headlines, all that kind of stuff. So I don't know. I don't know. You get my point. You know, depending. Well, that's it. Let's look at some gappers here into the open. Old McDonald's here gapping to all-time highs again. That's a beast. I don't know if tech data was earnings or whatever, but that's a big gap. Look here on my weekly, 86 bucks. Nothing to do with it. This was the one I posted yesterday morning saying I liked it as a watch. And then, you know, it blasted at noon with everything else. But it has a nice close here, and it has room on the weekly and monthly. So I'm going to continue to watch it. Qualcomm, 57.90. Yeah, I mean, it's a bottoming pattern. You got this unfilled gap. We're just going. Our goal is going to be just trying to find the best setups and intraday pullbacks. TLYS, 13 bucks, bearish gap. Lazy Boy, 33. So it's a bullish gap, of course, but it's too big. And these are earnings. Guess, gap down, box, gap up. Kind of like this shakeout here. This is a shakeout. You can see the bottoming tail on the weekly. This could be a 30-minute high trade. EXPR, that is ugly. That's an ugly gap down. Dollar Tree turned around. Wow, look at this pre-market. In the advisory letter that I sent out this morning on IYT, I said it's gapping under 80 bucks. And so that was a nasty breakdown. Totally reversed now. A&F. All right, markets are sideways here. Just be sideways with their pre-market. ANF, a monster gap. IBM. Ooh. Now, if this closes like this,